So we begin with our top story, a trade deal that's widely expected and quite possibly already priced in.
We may well see some interim deal.
Moving towards a trade deal.
Likely to be a resolution to the trade talk.
I think that the positivity is already there.
A lot of the good news on trade is priced in.
Priced in.
We don't think it's priced in completely.
I think the market's actually positioned for a sell the news.
Sell any sort of deal that comes down the pipe.
Even if we do get a deal, and it does look likely that we will get some kind of a deal, this isn't a happily ever after for U.S. China.
The devil, I think, will be in the detail.
We're going to have to turn around and see what actually happens after the Chinese trade deal.
This seems to us like a simmering cycle that continues.
I think we're going to be disappointed, and we're going to turn around and pick fights with the rest of the world, and a lot of the risk-on mentality of a trade deal with China will be lost.
It is Thursday, April 4th, and it is not Groundhog Day. Joining me around the table here in New York, Chris Harvey, Wells Fargo Securities Head of Equity Strategy, Kevin Divney, Russell Investments Senior Portfolio Manager, and Bloomberg's very own and one of our finest, anchor and reporter, Lisa Abramowicz. Lisa, great to catch up with you. It feels like Groundhog Day.
It does. I think that the focus is on the wrong thing when we talk about these trade talks. I think the focus needs to increasingly be on what CFOs are doing with this uncertainty. And I was speaking to a Deloitte executive yesterday who said that 85% of CFOs in a recent survey of theirs expects a downturn by the end of 2020 and are adjusting their investment as a result. So they are investing less because of the uncertainty, specifically about trade. That will have a bleed out into the economy, regardless of the exact specifics of the deal. It's just that there has to be some sort of deal to get a sense of what those might be. And I think that that's what people need to be focusing on.
What do you think, Kevin?
Last quarter, the earnings weakness was driven by China exposure. So I think in the short term, we'll see some of that being resolved. But companies planning their investment in China, a lot of people are not just trying to use China as a place of cheap labor, but a new addressable market. And if the trade deal addresses some of those things, we may see some tone by CEOs in their investments in China. There's planned investments. Some people have paused. But I think the U.S. companies having access to the Chinese market on higher-end products will maybe be the secular shift we get from the trade deal.
So there are two issues on the table. There's the narrowing of the trade deficit between the United States and China, buying commodities, buying energy products, soybeans, etc. Then there's the structural issues that Kevin speaks to, Chris. There's an opportunity there to open up another market in a big, big way.
There is, and I think Lisa's right. That you're seeing uncertainty and you're starting to see the slowdown, but you've seen this for some time, and people had plenty of time to think about it and talk about it, and that's what they've done. What they've also done is they've moved the supply chain at the margin out of China, and that's important as well. But overall, we are seeing a slowdown.